And welcome everybody to Greg Heym's Crossing the Line. Welcome to our all dude episode.
Yes, and the all boys club.
We got Lone Daddy Scott Nadler. We got your handsome host Greg Heym, and we got Ray.
Yeah.
Lena is out of the country doing something more fun than what we're doing.
Yeah, you didn't get the memo. Ray and I are wearing very similar shirts today.
Well, after your comment about how you couldn't pull off his pants last week,
that was
that's going to go on the blooper reel.
Poor choice of words. Yes.
No, it's one of those things. It's like Modern Family used to do that a lot, and then they'd always say, "Knew it as soon as I heard it." Like,
yep.
You know, that's
exactly
one of those things.
Hey, and now people know we don't really edit that much.
No, we're not.
We just talk and
there's no take two.
Correct. We just let it go.
We're far too professional to be that professional. It's like, you know. It's like we're always filming videos at gigs, and sometimes I hear a note or two I don't like, and I want to tell Nikki, just cut that part out, but it's like, no, then she'll complain.
No, it's authentic.
By the way, thanks to everybody at Bronzinos, including Morgan's mom, Evelyn, brought her crew
Your biggest fan.
Crazy women. It was like 75% female in there.
Wow.
And
you seem like you're complaining about this.
No.
Yeah.
I'm walking around while I'm playing. We were doing Isn't She Lovely? And I kept saying, where are the men? And they're like, they're home. I was like, okay.
Okay.
It was pretty wild.
You have groupies now.
At one point, someone at Evelyn's table was like, yeah, we're just a bunch of bad girls. So we started playing the song Bad Girls by Donna Summer. They all got up and danced.
Wow.
Except Morgan. She had to be reserved.
Greg really knows how to work a crowd.
Yeah. You know the old expression,
Morgan is the adult in the room.
Child is the father to man. It was Blood, Sweat, and Tears' first album. But that's kind of the thing here. Like, she's the mother to her mother when it comes to, having a good time. She's more reserved.
Okay.
She smiled a little bit and had fun. But
or maybe she was a strict parent growing up, and now the bird has left the nest, and she's going to let her wings flap.
Could be. I mean, she's the coolest person, Evelyn. Like, she's a lot of fun, but the parenting is different. See, my mother's not really that fun, and Ben likes to yell and scream, and that's the one thing we have in common in my department is each one of us has an Italian mother. Mm-hmm. So it gets a little crazy sometimes. Mm-hmm. But you could say that about almost any ethnicity of mother.
Correct.
Yeah.
Correct.
So, all right. So we're going to get on with the show in earnest right after these messages from our wonderful sponsors.
Sedgh & Zuckerman is a boutique residential law firm guiding you and your clients every step of the way with a solution-oriented approach. Make sure to work with a deal maker and not a deal breaker. Contact us today at sznylaw.com.
Investors, this is your moment. I'm Scott Nadler with CrossCountry Mortgage, and whether you're starting out or growing your empire, I've got the loan solutions to make your next move a success. Let's talk today.
All right, and we're back with Lone Daddy Scott Nadler. We don't really have any NBA stuff. We're still doing the summer of Jalen. We're still keeping the bobblehead.
We're going to let that ride.
He
for as
can
long
spotlight.
As
we should get a little spotlight just to put on him so he like glows.
I agree.
Because he's the king of New York.
He is.
He is. And you're not going to take it away from him.
As he should be.
I got to think him up in my social media feed to get a Knicks branded Yeti cup, and I was like, I couldn't decide the blue or the orange. To me, I think you almost have to go with the orange because that
stands out.
That stands out more than the blue. Sometimes they wear black. It's like, I don't know. So I just
orange is always there.
I didn't do it yet, but I'll pull the trigger at some point.
Okay.
But yeah, we got no NBA news. We're just gonna wait.
Yeah.
Hope everybody's healthy.
There was a WNBA game going on, and a friend of mine reached out to me to say, "Hey, you should turn this game on. The game's pretty wild." And I was like, "I'm not ready to watch basketball right now." I feel like we watching the playoffs and what the Knicks went through. I personally need a break.
You do, and being a Yankee fan, I'm trying to just like let it ride. The fact that the three best hitters and highest paid position players are all injured now.
Yeah.
But they made a good trade. They got the guy leading the National League in slugging percentage. So that would help. A lot of news. The joke is Tarek Skubal going to the Dodgers. Mm-hmm. They used to make fun of the Yankees in the 90s. They were getting everybody. Mm-hmm. Roger Clemens, Wade Boggs. Like, they were just getting the best players. That's nothing compared to what the Dodgers have done. When you look at how loaded they are, their rotation now is even better than it was before. A lot of people saying there's going to be a lockout next year. They may not even have a season.
When did that new ownership group come in and buy the Dodgers?
I don't know.
It wasn't that long ago.
It might have been longer ago than we think.
But it like Magic Johnson was part of that.
Yeah.
It was like right before COVID or like maybe around that time or.
And you know what? They just said, we're just going to spend money and win.
So it's like that Steinbrenner model that Yankees fans were accustomed to for so many years.
They had the advantage with Ohtani because a lot of those Japanese players want to be in the West Coast.
Mm-hmm.
Seattle's been successful in recruiting Japanese players. But, unlike the Mets, who are the second highest payroll in baseball and are in last place.
Yeah.
It's all about picking the right people. Steinbrenner wasn't great at that early on. Once he was banned temporarily and they let Stick Michael pick the team, that's when you get Jeter, Rivera, Posada, Pettit, like all Bernie Williams, all those players that they built this dynasty on that won those World Series like it was nothing after a while.
Wait, I can't remember if I talked about this. I went to a Mets-Phillies game.
And you're bragging about that?
That's not the story.
Was it in Philly?
No, it was here. It was at Citi Field. But the Mets lose in a tough game.
No news there.
But it wasn't exciting. Or it wasn't newsworthy. But these stadiums at these games, you have a hype guy. You have someone on the field with a microphone who, after the third inning, they're playing different music or they're playing different games with fans.
By the way, they don't do that at Yankee Stadium. Go ahead.
So at Citi Field, they probably have to, right? So the game ends, the Mets lose, and this hype guy, no more than 90 seconds after they lose, he gets on, he goes, "Who's ready for the fireworks show?" Like with so much excitement and enthusiasm right after they lost. And people were legitimately excited for this.
Well, you got to get something.
So I was like, this is what they're putting their resources behind. They're like, forget the game. Let's have this wild fireworks show. Like I've never seen someone who works for the team be so excited 90 seconds after a loss.
Yeah, when we were in Tampa, St. Petersburg at the Yankees-Rays game, they had like a hype guy who would talk to people in the stands in between innings, and it's like a minor league thing. It used to be. If you go to like in Long Island, we have the Long Island Ducks all the way out of their independent league, but they do fireworks like almost every weekend. And the tickets are cheap, but the quality of baseball is not good.
Right.
It's where a lot of people go at the end of their career, like Jose Canseco, Vladimir Guerrero, Trevor Bauer is there now, a guy who won a Cy Young Award, but no team will sign.
Yep.
So, but look, the Yankees have a second best record in the American League. They have a great pitching staff. Garrett Cole looked dominant. I think they need to get Aaron Judge back.
I was going to say, the focus has to be on getting healthy in the next 30 days or so.
Because they're just going to pitch around Ben Rice now. At least now they got some support, but Paul Goldschmidt isn't going to hit like this forever. And, Ben Rice seems like he's starting to fade a little bit, but he's still having a great year. And the pitching can only do so much. But you look at the Dodgers and it's like...
Ben Rice is one of those names where you have to say the full name.
Because you say Uncle Ben Rice, Yeah. Well, if you have a short, yeah. Some people in the office call me Greg Heym.
Greg Heym, yeah.
I don't know why.
Right.
So, anyhow, all right. Let's get to the meat and potatoes.
Let's do it.
The Fed. So the Fed had a meeting last week and didn't do anything. Now you'd say, well, that's it, Greg. Like what? Ray's like, all right, move on to the next topic. Why aren't we? But it wasn't that simple. 3 dissenters who all wanted a rate hike. Now the markets are picking September. That's saying they expect 25 basis point hike in September. I mean, look, the bottom line is inflation has been above their 2% annual target rate for over 5 years now. Mm-hmm. Remember, at one point it was 9% briefly in 22. Yeah. So, this isn't like this is just a recent phenomenon. It's been going on a while. They have this dual mandate, maximizing employment, price stability. Employment's looking okay. We'll find out at the end of this week how good July was. It was probably...
Although the labor force participation rate's been very low.
Right. And we talked about NILFs.
We did.
Again, that means not in the labor force. That does not mean... I don't know what you think it is. Send what you think it is to ctl@bhsusa.com because, it would be interesting. So it wasn't a surprise. Everybody knew it was going to happen, but markets were kind of upset at Kevin Warsh, weren't they, Scott Nadler? They want him to say more. We want him to say less. So was it just a temper tantrum because now they're not being spoon-fed the Fed's game plan?
Yeah, I you know what? I think when you bring in a new Fed chairman, you're bringing a new position for anything. You kind of want not necessarily the opposite of what the other person did, but you want to change, right? The Knicks bring in Mike Brown because they didn't think Tom Thibodeau was very good as an offensive coach, right? So you bring in someone that can do something the opposite, where Mike Brown knows how to conduct an offensive scheme. So we came from a time where Powell was overly transparent about what they were doing, right? He was tipping his hand, so the markets knew how the Fed was going to react. And oftentimes what we would see is you would see things were already priced into the market. And what Warsh is saying, not to bring it back to sports, but he had a sports analogy. I'm not quoting this exactly, but he said something to the effect of market participants will have to start playing the ball and not playing the referee. Yeah. And I think that kind of highlights, it sums up what his philosophy is. It's because for so long we've had the, people in the market who are not focused on the fundamentals of what's happening in the market in terms of inflation and job creation, all that kind of stuff. Right. They're focused on every single word that Powell is saying in a press conference, and they're following that as opposed to following, what their data is showing them about the market itself. So I think that's a massive change. This is something that the markets are going to have to get accustomed to with the new Fed chairman, where he basically said the same thing in this meeting that he did in the last meeting. So he's not mincing his words. He's saying virtually the same thing.
The press conference, though, was the deal. And he's like you said, they're basically betting on the bond markets to do the work for them. And, they are.
Right.
They're the ones tightening now. Mortgage rates going up. We'll talk about that later. That the private sector can take a part of this. And he actually said, quote, at some level, we haven't done much in 42 days. The markets have done quite a bit. And, this is really upsetting the market because, again, they want to know, and this is the whole idea of forward guidance. That basically means us telling you what we think we're going to do. And Warsh's comments when he was appointed was basically, that we dig in on that too much. We don't admit that, maybe that's not, why is their estimate better than what Wall Street, like you said, they've already priced in, rate hikes at a certain point. They expect it. The problem is that what's going up in the markets are 10 years and above, 30-year.
30-year, yep.
And that's, 10-year especially is going to bring up mortgage rates. Whereas if the Fed started cutting, it would certainly hurt, I think, GDP growth and spending, but it would get mortgage rates down because I think people would see that, okay, we're doing something about it. Now we're coming off a really nice drop in inflation in June. We don't expect that in July because hostilities started again, but now it's another pause. I can't keep track, and I don't know why markets keep, like this morning, the Dow was up 700 points.
Right.
Because the administration stopped a planned attack.
Right.
How many times is this going to happen? Why? How often are we going to rattle?
A lot of
markets?
head fakes. Yeah. There's so much underlying weakness in the economy as well, which is what the bond market is focusing on too. So you have Japan, China, were historically, they still are, large holders of U.S. Treasuries, and they are scaling back on that. China specifically, and
we just bought all this yen.
Right.
It's weird,
right?
So I guess we said, hey, you're going to buy ours? We'll buy. Why don't we just buy our own?
Right.
Or don't borrow it to begin with.
Right.
That would be a better solution.
But also when you have all this debt that the markets are paying attention to, that I feel like it's a can that we're kicking down the road. What is it? $2 trillion, a $2 trillion deficit, $40 trillion in debt. At some point that debt has to get paid back.
No, it doesn't. No,
or you just kicking the can down the road, and yeah.
Well, what you do is you look at it in terms of GDP, right?
Which GDP growth is at 1.5%. I mean, it was super on the very last reading.
It's like you as a mortgage lender. The house you're buying is one thing. How much money you have is another, right? So you look at it in terms of GDP, and once you get over 100% of GDP, if you're not in another world war, that shouldn't happen.
Right.
And unfortunately, people always say, well, it's these tax cuts. That's not true. If you look at the revenue, and IRS puts out a monthly thing, tax revenues have never been higher. Mm-hmm. And, that's the issue. Like it's like I get a big raise and yet I have less money in the bank because I'm spending it all.
Right.
They spend too much.
They spend a lot. But, this is also, I think, the first time since Bretton Woods where central banks are holding more gold than they are treasuries, which is a wild statistic in and of itself.
Well, yeah, I mean, if you want to tighten up the market, you'd sell your treasuries, take money out of the economy. M2, which is basically one of the measures of the supply of money. M2 is basically like all the money you have in your pockets, not that anybody has cash, your savings accounts, credit cards. No, you don't.
I have cash in my pocket right now.
You do not. How much cash is in your pocket?
Take a guess.
Knowing you, there's probably like a 20 folded up in there or something. Look at him. Yeah, thanks.
I just keep that on top, and it's covering ones.
Nice. I should have kept it, but I'm on camera. They would know who stole it, right? That'd be kind of foolish of me.
My father always said, always have cash on you, and it stayed with me. I don't think he anticipated a digital currency and paying with your phone and all that, but it's still stuck in my head. It's good to have.
My mother used to always say, make sure you have cash on you in case you're mugged. Because they'll be happy. They'll be happy.
Leave me alone. Take this.
They won't be very happy if you don't have anything. And I think I'd like to see, do muggers really exist outside to steal your phone or jewelry? They know most people are not carrying money, or if they are, like I get paid in large bills when I do gigs. It's funny, they'll give us, $300 bills and that split it. It's like, could you give me 20s and 10s of one of this? I'll rip it in half.
They want your credit card now, so they could just go on a shopping spree before you cancel it.
Right. And, that's why credit card companies are smart. Like American Express, if even the slightest thing looks weird, I get an alert right away. Yeah. I get a text, I get an email.
Right.
And you say, nope, not me, and you're good.
Right.
Because they don't want to be on the hook for it either.
Right.
All right. So, the Fed has a 2% target. And it's funny because remember a couple of years ago, we started saying, because the Fed always looks at core inflation, the personal consumption expenditures price index, the core version, which excludes food and energy. And don't look at that. Look at super core. Remember, it was just like, oh, this is great. So we all knew that housing was the driver of inflation for a lot of the last 6 years or so. After COVID, kind of things started to reopen. People were buying homes like mad, and housing had become. So it basically it was services only and excluded food, energy, and housing. When was the last time you heard anybody talk about supercore inflation? You don't, because it's not showing what they want it to show. So now we have a new kind of inflation mechanism, which is trimmed mean inflation. So what does that mean? Oh, I guess
Please break it down.
I'll break it down for you. So what it does is, so you have core inflation, which takes out food and energy because they're very volatile, right? We've seen the headline numbers, CPI and PCE, show declines in June because of the drop in energy prices, whereas the core numbers didn't show that. They were kind of flat. So what this does is it will look at the highest gains and the biggest declines and remove those. So I'll just run through it.
The outliers.
Yes. So it starts with the information from the Bureau of Economic Analysis. They put out GDP, PCE, and a bunch of other three-letter stuff. So then they rank them from lowest to highest, right? And changes from negative all the way to positive. And then they do something called asymmetric trimming. So this is why I'm not teaching in university.
A mouthful.
So it trims 24% of the weight of the lower tail, the biggest price drops. And yes, they're called tails. And 31% of the weight of the upper tail. Why they do 24 of the lowest, I have no idea. So you're basically taking out a little more than half of all the stuff. And then it's a weighted average. So if you look at that, the year over year increase is only 2.2%, which is right there. And, a lot of people saying, well, you're kind of cheating, right? But if you're taking the highest and lowest out and saying, because those are usually because of some special supply issue, a drought, whatever it might be. Obviously, with oil prices still being elevated. Everything's become more expensive. So it's interesting. The Dallas Fed puts out the most followed trim mean inflation data. And again, that's showing a 2.2% year over year. So are we just confusing people by coming up with more? Like inflation wasn't, we had already heard enough about inflation. Now we have to talk about every type of inflation.
And it depends so much on what lens you're looking through. So if you look at it through this lens, you might think inflation isn't as much of a problem. If you look at it through an old model, maybe it is. So are people starting with the conclusion that they want to get to and then working their way backwards, say, all right, how do we get to show everyone that we're at lower inflation so we can show? So that's when things get dangerous. When you have your mind already made up, the story's already written. Now let me backtrack and figure out how to get to that story, as opposed to let's look at it like a clean slate with a blank canvas, and we're then going to go through different methodologies. Now, maybe this is the right one. I don't know. What is your opinion as far as how they were previously calculating inflation, how they're looking at it now? And obviously there are all these independent sources also that calculate this stuff also.
Well, look, there's different ways to look at it. For one thing, you look at the headline number that includes everything and you say, well, why don't you look at that number? At the end of the day, we're buying all that stuff. We're paying for housing. We're filling up gas tanks, except me because I have a Tesla. You're buying food, like that affects us. Why you just going to ignore the pain? You know, and sometimes it'll help. Like last month it helped. But you say, well, it's volatile. We want to take a longer term look at this, especially with the war going on in the Middle East. That's going to affect energy prices in a huge way, where you see them go up 20% in a month. So it's okay to look at subsets of it, but you know they've made it clear from the beginning. They're looking at the core PCE number. It's the most complete number. It's showing that things aren't terrible. Remember, the 2% thing, it's not like it's a constitutional requirement. It's just a number that they basically was just picked during the Greenspan administration, I believe. Just say, 2%.
Right.
You know, we've also been familiar with governments picking other random metrics for stuff. But this is like, okay, we'd like it to be 2. Does it have to reach 2? Is it, close enough, like horseshoes and hand grenades, as they say? We're not close enough, and we need to do more. But the ultimate question, and we've been saying this, let the markets sort as much of it out as they can. It's like I tell the brokers, did you look, in the listing system if they ask a question about something? Did you try to answer the question before you called or emailed me? That's kind of the way you have to look at this. Can the markets help? They're smarter. They think they're smarter. But now they're throwing, they're holding their breath on the floor screaming like, kids used to do in Toys R Us when it was still a thing. And it's like, I want this. I want the forward guidance. You tell me, tell me the dot plot, give me all this information. And, Warsh is also talking about fewer meetings, because if you're not going to do anything, what do you need a meeting for? Markets get amped up, things get priced in, everybody gets angry.
Right.
It's like, okay, like maybe you could cut down a couple meetings.
Right.
Because if you're
it makes sense now. I mean, I would say during Powell, not to defend Powell in any way, but I'll do it just for the sake of the conversation.
You're just doing it to get me mad.
And I want
to doing it to get me mad, right?
Boil your blood a little bit. When you have regional banks going down and you have inflation running wild, having that transparency for the markets just to calm them down a little bit, even though it didn't really do what it was supposed to do, I think it makes sense, being a lot more transparent. But coming on the heels of that, where Warsh is, it makes sense, his philosophy right now as well. But going back to what you were saying as far as this new methodology, if people ask you what's the average sale price of a home in New York City, and there's a month where a home sold for $55 million.
$55 million. How about $155
million, right? Are we counting that sale or are we not? Like that obviously is going to skew. Whereas the following month you might have something that sold for whatever reason for $55,000. That's going to skew the numbers.
I remember when, especially 15 CPW was closing the initial
Central Park
sales.
West.
Yeah, Central Park West. Beautiful building. And
I think A-Rod had a place. I mean, a lot. I think A-Rod for sure.
I don't think A-Rod was in that. A lot of Wall Streeters, Sting. I think
I thought
Denzel. I think
was
Jeff
there a
Gordon.
book written by a doorman? I thought it was.
No, there's
15
a book written about the same guy that wrote the book on 740 Park. I forget Michael. I can't remember his name. But anyway, the point was what that did to the West Side data. Because with new developments, they all tend to close at the same time, like when the building's ready to be occupied, right? So it could jack it up. Or you look at Billionaires Row, West 57th Street, you have 157, all these buildings, not Midtown prices, even the plaza, and it's like, wow, okay, how am I going to explain this? And when you have to put so many footnotes basically in there, it's like, is this report useful?
Right.
And what I always tell people is market reports are useless when it comes to pricing things because we can only report on what sells.
Right.
You know, if you want to know the stats, you know, how the overall market, how many apartments or townhouses sold, what was the average price? The average price is totally dependent on the mix of what's selling. You sell more condos than you normally do, it's going to go up. Condos are more expensive. You sell a higher percentage of co-ops than you normally do, it's going to go down. How much new development closed? What was that new development like? I dread doing those things. You know, we do a lot more important timely reports like inventory numbers because that's the true metric if you were going to pick one.
It's also more sensitive when you look at local data versus if you look at national
Right. If you
data.
say New York City, I'm going to say all the boroughs.
Right.
Big difference between, you know, Manhattan and the other ones.
Right.
And they have different housing. You know, a lot of these boroughs are very heavily rental.
Right.
So
Like anything else, if there's more data available, then the numbers start to be closer to what the reality is, as opposed to these outliers where you have 20 sales, one can heavily weight towards one side or the other.
And they always say there's lies, damn lies in statistics. Statistics don't necessarily lie if they're presented correctly.
Right.
You know, and I think that's like I've told brokers here, read the report before you send it to somebody. Because if you have a 2-bedroom on the West Side and you're trying to get a price reduction, and our report shows 2-bedroom prices are actually higher than a year ago, the average price, that's not going to help you. In fact, that's going to make your seller a little angry. So I think
that's like what we just said before, how central banks are holding more gold than they are treasuries. It doesn't necessarily mean that they're buying more gold. It means the gold that they're holding is appreciating at a very high clip.
Well, the Fed has also made it clear they want to reduce their balance sheet. At least Kevin Warsh has.
Yeah.
And you talk about Powell. Now he has these committees, Warsh, to reform the Fed. What's the data we're looking at here? You know, how are we communicating? You know, things that sound like good ideas. The problem is Powell's not leaving. Why he's not leaving? Is it out of spite? Does he want to stick it to the administration? You know, I don't know that he has anything against Kevin Warsh. Warsh was a governor when he's chairman. I don't know.
Yeah.
But the problem with being the chairperson of the Federal Reserve is you're going to have some kind of terrible thing happen if you have, like, especially if you're there for more than one term. You're going to have a financial crisis. You know, now we've seen all the things that can happen, pandemics, you know, natural disasters. We can get a lot of these things that can happen. And I think the Fed was also trying to do too much. The dual mandate is hard enough. Look, right now, employment is okay. You know, and we'll talk about GDP.
The idea of letting the market follow the data themselves as opposed to following one person's words makes a lot of sense. And it reminds me of, I was reading something a long time ago, and I forgot exactly where this was, but it was somewhere overseas where they were building a housing community. So they took a plot of land and started building houses and built like a whole community. They wanted people to move there. And so they built the homes.
Right.
And before they paved the roads and the sidewalks, they let people naturally go from one place to another. They're like, why are we going to put in the roads and sidewalks? Let you tell us where we should put it. So how would you naturally get from your home to your office, from your home to the school? How would you naturally get there?
Right.
And when they see the footprints over months and months, it's like, all
you
right,
see the brown spots in the grass.
this is where we can start building it. And as opposed to the other way around.
Well, that's like you can't sell color to paint a room. So you put a little paint on the wall, live with it. It's like my guitars. 'cause, you know, I love to, you know,
Yeah.
I'll make adjustments. Like I want to get the strings lower the action, get them close to the fret. It's easier to play. So I'll do it. And I'm like, can I get it lower? Can I get it lower? And then part of me's like, you know what? Just leave it that way. Play it for a couple of days and see if you like it.
Right.
And then make the incremental adjustments. But it is true, asking people, and we all get these surveys too. You know,
I've never
how was
responded to one.
it's like, how was your experience? I saw Rush last week. Great show. Lot of fun to hear those songs live. It was loud.
I know people who were there.
And the visuals were great. And Annika Niles, no need to worry about the drumming there. She was outstanding. Just 3 hours of enjoyment. You know, the Alex and Getty are really likable guys. I think they have a couple of tributes to Neil Peart in there. They were really nice. And some really funny sketches. You know, there's the South Park thing where they have Little Rush and they pretend, Cartman, all them pretend to be Rush, and Cartman singing the wrong words, so they're screaming at him when they're doing Tom Sawyer. So what do? They incorporate that in their show. They show that clip, and then right when he counts it off to do it the right way, they take over, and it's, you know, it's pretty funny.
Very cool.
And Rush writes, their music is pretty serious. Like,
Yeah.
Neil Peart wrote some really intense lyrics about a lot of things that were on his mind.
Speaking of live entertainment, I saw Death of a Salesman on Friday, the Arthur Miller show play.
Yeah.
And oh my God, it was really absolutely incredible. Nathan Lane was
Willie Loman?
Willie Loman. Laurie Metcalf played his wife. And
She's great.
she was fantastic. They're both great. I mean, the whole cast was absolutely incredible.
That's one of those plays you were forced to read in high school. It actually wasn't that hard to read.
No.
Like reading Equus
I don't even remember
was
reading
really
in high
hard
school,
to read.
but yeah.
You know, like the Shakespeare stuff was really hard to read. But
And now Odyssey is so big right now.
My son wanted to go see that, and I was just like, I don't know, because when you read the books, the Odyssey and the Iliad, I actually read them in that order. I should have read the Iliad first. When you see the movie, it's a bit of a letdown because you have these.
I thought you didn't see the movie.
No, when I saw Troy,
Okay.
you kind of, because you envision in your head what these characters look like, right? You know, Odysseus or Ulysses, you know, Agamemnon, you have Achilles. Like Achilles, you can't kill him except this little spot in his ankle, right? So, you know, Brad Pitt was pretty jacked. You know, he kind of got it done in the movie, but it's like, that's not how I pictured him, or that's not how I picked. And then they change some things. And you're like, wait a minute, that's not what happens to that guy. So I don't know. I'm just not a movie guy. I fall asleep.
Fair enough.
My son went to see Spider-Man at 12:15 in the morning.
God. Did he dress up?
Not that I'm aware of, unless he did. I didn't know he's, you know, I guess that generation is really into the Marvel, and superheroes had like another.
The experience also.
Yeah.
That's got to be fun.
Well, being able to go to a movie that late, I remember doing that at his age, so
Yeah.
it's kind of cool.
Yeah.
You know, in the old days, we'd wait up for him, but now he gets home too late.
I feel like movies are coming back. Like the experience of going to a theater and seeing a show, seeing a movie, like what they're doing with IMAX right now, and they're doing things with the seats, like they're copying that sphere model of making it more of an experience.
Well, it's like going to a ball game in that now you can get alcohol. They have food. Like you can get a burger. Like you can get it delivered to you.
100%.
And it's like, yeah, now it's like going to a ball. Everybody complains about the food and drinks at a ball game. It's the same thing in a movie theater now. It used to be just popcorn and a Coke. Like
I heard they were talking about intermissions in movies also.
They used to do that though with longer films.
I didn't even know they did that. Wow.
Yeah.
Okay.
I think Godfather was one of them. You know, you have a movie that long.
It makes sense now, especially with attention spans and everyone's on their phones. So
Plus, you got to buy drinks that are so big. It's
right,
like
you got to go to the bathroom.
All right. Well, I think that wraps the bow on the Fed. We're going to get into GDP and other things right after this commercial break.
I'm Mark Lawrence, a founding partner of Worldwide Land Transfer. As a former real estate agent and attorney, I understand this business from every angle. We specialize in the complex transactions that define the luxury market: trust, LLCs, estates, and inherited properties. For more information, contact me directly at 917-204-5363.
Since 1941, Scanio Movers, our family-owned business, has helped families move with confidence. When you call us, you meet directly with the owners, not a salesperson. 3 generations of experience, 1 commitment, treating your move like it's our own.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
And we're back with Loan Daddy. Ray, yeah, a little slow with that clap, Ray. Come on. You don't notice the difference because Linda doesn't really clap like that. Like, she'll go like this maybe, we'll get a little golf clap.
Ray goes for it.
He goes for it. He's thunder hands over there. He's like, don't call me that. I don't like that. So we had GDP come out. It wasn't that exciting. It came in below expectations. GDP, for those who are afraid to ask, is gross domestic product, which is the value of all the goods and services produced in the United States during a certain period. And when you hear GDP was 1.5%, that's the annual rate of growth. If we grow at this pace for a year, the economy would be 1.5% bigger a year from now. And
which is not good.
It's not good. 1.5% isn't good. Economists are looking for like 1.8 to 2%.
Which is also not even great, but
no, but 2% would be nice.
Better, yes.
So the big thing is, well, how do you calculate this? Well, you start with consumer spending, and that's basically 70% of that number. What me and Scott buy? He buys Loan Daddy hats. Mm-hmm. I have bobbleheads and guitars.
Right.
We all get. And Ray has
essentials,
cool vintage pants that we can't.
We're gonna keep on.
We can't pull off. No, we can't pull it off. Plus, nobody can see my pants, so I don't even have to wear any if I don't want to.
No comment.
So consumer spending, or personal consumption expenditures, as it's called, or stuff we buy.
Mm-hmm. I like that better.
Rose at a 3.2%.
That'd be good, by the way, like an urban dictionary style of econ terms.
I'll do that in the blog. I'll say, personal consumption expenditures,
right.
AKA stuff we buy,
right.
Things like that. 3.2% is pretty good for consumer spending. You think about inflation, they're paying more for so much of the stuff. This is adjusted for inflation, so it's an okay number. Investment, remember it's personal consumption expenditures plus investment plus government plus net exports. So that's what we import minus what we export. I mean, the other way around. What we export minus what we import, and that's usually very negative, right? We know that.
What we're selling versus what we're buying.
So investment was up 3%. And you go, that sounds okay. But that was down from almost 8% in the prior quarter. But it was net exports that killed us. Subtracted 1% from that GDP number, it would have been 2.5% instead of 1.5%. Government spending down a little bit, but not really any major thing. So consumers still out there doing their thing. But how long, now that, we had a little reprieve in June, we thought we had a memorandum of understanding, but now we don't have that. Hostilities are on, they're off, to spin a wheel and guess. So what does this mean for the consumer, knowing that now these prices are going to go back up?
This is for June, right?
Yeah.
Yeah. So we had the World Cup, right?
Well, this is for the second quarter.
The second quarter. So I don't know. I'm thinking about what happened in the second quarter. The World Cup was obviously a big thing. It was a big economic boom as far as spending.
It was, not employment, but spending. Well, maybe those numbers will be revised.
Right.
We don't know.
I don't know. How do you process all this? In terms of spending continues to be very resilient. We are not slowing down.
Well, you look at the credit card debt and how, once you cross over $1 trillion, it almost seems like fake.
Right.
And
this is something we've been talking about for a long time, as far as how...
And the uncertainty with student loans. I got to pay them. I don't got to pay them. I know we got to start paying again.
Right.
Maybe we don't have to start paying. You look at what's happened to rents. Obviously, across the U.S., we're not building enough homes. Everybody agrees on that. Finally passed this housing bill. Will it lead to more housing? Everybody's got it. We just have to build more. We have to build more. Okay. How does that happen? And what are we building? We seem to need both single-family homes and multifamily units. And that's going to take time. There are zoning rules. There's the whole NIMBY thing. Like, I don't want this big thing next to me, or, you're going to block my view.
Do you find, though, that there's such a mental shift overall in terms of when you were growing up, when I was growing up, there was the thought of how important it was to save, how important it was to invest. Investing could mean investing in the market, investing in yourself, investing in education, et cetera. Now there's such a mentality of we're such a consumer-driven economy. I mean, we've always been that, but in terms of always looking at the person next to you and seeing what other people have and how that wealth gap has widened so much. I was looking at, there was I think it was like the president of El Salvador had a tweet where he said something to the effect of, I'm not going to get this exactly, but did we escape the 2008 financial crisis or did we just shift the pain? You know, talking about how the economy is right now and inflation and all that. So it's just interesting to like.
Well, the government is like the consumer, right? You know, we have this problem. We have this financial crisis. You know, the banks are failing. You know, he's like, what do we do?
Mm-hmm.
Well, let's just throw money at it.
Right.
You know, let's just do that. Let's just print money and send it to people.
Bail them out, which
we have
upset a lot of people.
Yeah. Let's increase the money supply by 40% and be surprised when inflation comes around and we can't get rid of it. You know, like the auto companies, like, why are you bailing them out? You know, and it's funny, we made a lot of money bailing, you know, a lot of these industries out. We got essentially paid back by all of them.
I think we got through that period. It was just once COVID hit, and then we threw what was it, $3 trillion
the thing is, it's
onto the economy that was just about to open up.
The financial crisis is interesting because, you know, you had all the spending, you know, in the name of recovery. You know, we have to deal with this crisis. First, it was TARP, right? So we're going to buy these troubled assets. There's a troubled assets relief program. And the problem is they didn't know how to value them. They basically had no value because nobody would buy them.
Right.
And it's like, oh, we're going to have the Recovery Act. We're just going to send money and we're going to do this. And that's going to go. And that didn't work. The Dow just kept dropping and dropping and dropping. And then one simple change to a rule changed it all. And it was mark-to-market accounting. Because if Scott owns all these mortgage-backed securities and no one will buy them, how does he value them? They're worth significantly less for sure. But if you have to mark that to market, basically what that means is, you know, let's say I own my home, right? And I paid $300,000 for it and I had a $250,000 mortgage. It's kind of like if my house is now worth $200,000, then the bank's going to want, we want $50,000 because now you're underwater, that you can't do that.
Margin calls.
Right. That's what they had to face. And once you suspended that rule in the beginning of March of 2009, nothing but up. And the resiliency of the stock market is like the resiliency of the consumer. We can look and say, well, clearly economic growth is slowing. People are leaving the labor force. Why is that? You know, I think in the old days, you didn't hear a lot about investment when I was a kid because the average person wasn't investing. It wasn't that easy. You know, we didn't have all these index funds.
But keeping your money in the bank,
you were
getting more than 2%.
Right, you had higher interest rates.
Correct.
But that means higher mortgage rates.
Right.
You know, one goes with the other. But, you know, plus people had pensions back then. So they didn't have to worry about saving for retirement. The company was going to take care of them after 25 years. Plus people didn't live as long. That's, you know, I always say there's two mistakes that people make when they think about retirement. Number one is, why do you think it's up to you when you retire? Just like athletes, people with regular jobs are often told, yeah, we're letting you go.
Willie Loman.
You make too much money. You know, we can't afford to pay you anymore, or we're you know, what you do isn't necessary anymore. Right. Wall Street does it every year.
Right. And
the other thing is you underestimate how long you're going to live. You know, the average lifespan is about 80 years in this country, but it's, you know, you worry about that. And I think we talk about all the time, lack of financial, you know, education. People would also know not to panic when you see 30, 40% declines in stocks after Lehman Brothers, when COVID hit. You know, the worst thing to do at that point is to dump it all you just locked in a 40% loss. You know, and I think a lot of people get carried away leading up to the financial crisis. People buying any stock. You could have thrown a dartboard and they were going up. But I had
a client years ago, 84 years old. Owned a home free and clear. It was worth about $1.6 million. Never got married, no kids, was running out of money. He called me and was like, I never expected to live this long. So now I need to pull cash out. And when we were going through his options, at the time, the 30-year fixed mortgage was just lower, and it made sense for him to take a 30-year fixed loan. He's like, are the banks going to approve me for a 30-year fixed loan? I'm 84 years old. And it was like, we're not the ones to decide how long.
He's not going to live to
You're gonna live.
114? No, yeah, it is. You know, one of the problems of the financial crisis is people's homes became an ATM, right?
Yeah.
I'm just keep pulling money out. That was their savings.
Everyone thought
my home.
prices are just going to continue
They
to
just
rise.
go up.
Just going to go up.
And they feel it with stocks. The interesting about stocks now is talk about an economy where growth is sluggish, 1.5%, not great, where hiring was great, you know, the first half of the year, almost 4 times what we got all of last year, unless there are massive revisions, which is always a footnote we have to put in there. But in all this, now we've seen hiring slow down dramatically. A lot of that is people leaving the labor force, but stocks don't care. Companies, almost 90% of companies that have reported in second quarter earnings beat estimates.
What percentage?
Almost 90%. The number is usually pretty high to begin with, but this is really high.
Because their initial projection or forecast will be low, so they can beat expectations.
Maybe that's
It's like what airlines do. You know, we say we're going to arrive at 3:00, knowing for sure we're going to arrive probably by 2:40, just so our numbers say all of our flights arrive
under
on time.
promise and over deliver. That's
exactly.
what But the other thing is companies are making money. And that's all the stock market cares about. They don't care about what the number of inflation is. They'll have a reaction if it comes in above or below forecasts. They'll react to that briefly, although a lot of it can be priced in ahead of time.
The idea then that the stock market is being propped up by 10 companies, all these AI companies.
They were the ones hurting, though. All these, the NVIDIAs, you know, the Teslas, all of these ones that they say are drivers, there's a handful of these tech companies. That's not true. They were underperformers in the second quarter. So I think that, you know, it's hard for the average person to take all this in. Why do we keep seeing these great runs in the stock market when nothing is improving in the economy? Inflation is still a problem. You know, wage growth is slowing to the point where prices are now growing faster than wages.
It's always been the case that the stock market is not truly indicative of the health of an economy, right? Like how many,
earnings and interest rates. That's
right.
What a lot of financial advisors, that's all we care about. Right. The rest of it is just noise, as you always say about tuning out the noise.
Yeah, find the signal within the noise. Yeah.
All right. We got to take one more break, I think, right, Ray? We'll be right back and we're going to talk about mortgage rates. We are back. All right, so we talked about markets reacting basically to the Fed doing nothing. There's like, okay, you're not going to do it. We're going to push rates up,
right?
Particularly 10-year treasuries and longer duration bonds. So mortgage rates rose to an evil number, 6.66%.
Very symbolic.
Very symbolic. Still over 1% lower than the average of the last 50 years. We always have to remind people of that.
Glass half full.
Yeah, well, almost. Anyhow, not many economists are known for being optimistic, glass half full guys.
I like that we're optimistic during the mortgage rate conversation, though. It's good.
No, I think one of my favorite expressions is take the win.
Mm-hmm.
Like, don't complain about it. It doesn't matter if it's because someone made an error.
I like that.
You know, or San Antonio didn't know how to defend an inbound and left OG by himself. So don't worry about it. Just take the win.
Also, find the wins.
Yeah, that's also a good thing. But so what has your last week been like?
Look, we are going opposite of what Warsh is doing. We're being as transparent and communicating with all of our clients right now on more of a regular basis. We have to be, because it's so volatile. Things are moving quickly. And what we're saying, I feel like a broken record. What we're saying to so many clients is it seems like rates will get worse before they get better. And I think just hearing that and understanding that and explaining it to people, most people get it. I've not had a difficult conversation where it becomes combative. It becomes combative in my career where you go 3 weeks without talking to someone,
Right.
and they expect that they're just, and I envy people like this. They're kind of in their own bubble. They're not following what's happening in the markets. They see an initial document that they received from their mortgage lender that says the rates are at 6%. And then we call them 3 weeks later and say, hey, sorry, rates now are at 6.6%. What do you mean they're at 6.6%? So it's so important for anyone in our position to make sure that we're communicating with our clients. I mean, it could be any industry that you're in. When we're on that downward trajectory and you see rates are going down, you don't need to communicate as much. It's fun. It's a fun call to make once a week, once every 2 weeks. Hey, remember when the rate was at 6%? Now it's at 5.5%.
It's like when you pull the slot machine and you get like the 3 bars, and you have no idea how much you're getting paid out. And it's like, keep coming.
Right. So but with that being said, clients aren't happy about it. And I think the clients who are on the fence right now, who maybe have an accepted offer, but they don't have a signed contract yet, they're getting apprehensive about what's happening in the market, and they want to either get the contract.
Prices won't come down. That's the other issue here.
Yeah.
If prices were starting to decline a little bit, again, inventory is just not getting high enough in most areas to do that, then people are like, all right, again, I can always change the rate later, but I can't change the price.
So the one thing I'm also saying to so many people is rates are at 6.5% right now, 6.6% right now. If they went to 6.8, 6.9, or 7%, this is what it would do to your monthly payment. How would you feel about that? And some people may say, I'm not purchasing a home if the rate's at 7%. And some people will say, what does that do to my monthly payment?
Right. Or how does that help me leverage that to maybe get a little break on the price?
Correct.
And it's interesting because we were starting just to get used to rates hovering around 6.5, not moving much, a little lower, a little higher. We don't want to see that new hovering range 6.75 or 7, right? I mean but
now on that same.
Remember the Nadler rule: mortgage rates go up a hell of a lot faster than they go down.
Quicker, they go up like a rocket ship, down like a feather.
Just like that.
Exactly. We are seeing more clients who are more concerned about their monthly payment than they are about their asset position. Meaning, if their assets have appreciated and they have extra cash, they want to pay that point to lower the rate to keep their monthly payment where they initially thought it was. Now, some people have to do that because if they're looking at a co-op and they need their debt to income ratio to be at a certain level that's acceptable for a co-op board, we're at the mercy of that co-op board.
And for those of you in most parts of the country where co-ops don't exist, basically you don't own real property. You own shares in a corporation that owns the building. And because of that setup, you're all in it together. Like the taxes on that building, any maintenance, everybody has to pay towards that. And there's a board. Condominiums have boards too, but the rules aren't that strict. With a co-op board, they can set guidelines for, what percentage of your payment it can be of your assets, how liquid are you? There's a lot of rules that go along with that.
You need to you don't just need to qualify for the bank, you need to qualify for the co-op board and what their requirements are. And oftentimes their requirements are stricter than the bank.
Well, because if Scott's going to move into my building, I want to know that he can pay his maintenance.
Right.
Because I don't want to pay his maintenance.
Right. Exactly.
So now there's a thing now with condos. We're seeing a change with Fannie and Freddie where there's new policies which could lead to more scrutiny by lenders.
Yes.
And I know we were talking a little bit before we came on that like a lot of this is already kind of happening before. But what do you want to say? What do people need to know about that?
I think
there are condos everywhere.
I think number one, I'll start on the listing side. For people who are selling their home or agents who are working with people who are selling, it's so important for everyone to understand if you're selling your home and you're in a condo or a co-op, it doesn't matter how much money you put into that home. It doesn't even matter so much as far as what you paid for that home. It matters, it's important, but what matters almost just as much right now is the association itself. What is happening with that building? So if I'm an agent and I'm working with someone who's selling, I need to let them know not only do I need to sell these 4 walls and your beautiful kitchen and the bedroom count and the view, I need to sell the association. And right now, your association is going through a lawsuit, has lack of reserves, there are repairs that need to be done in the building, and they're deemed as critical repairs. All this is impacting someone getting a mortgage in this building. As a result, we need to price it accordingly. So does that mean, now, if someone's getting a mortgage in a building like that is not Fannie Mae or Freddie Mac approved, what does that do to the buyer? That might increase their mortgage rate. We're just talking about rates. So maybe instead of taking a 6.6% rate, they need to take a 7.6% rate. So what does that do to someone's payment? It increases it by X dollars a month. As a seller, it's important for you to know that, because people will oftentimes buy on monthly payment versus purchase price, but we live in an environment, in an industry that advertises purchase price, right? If I went to someone and I say, what costs more, a $600,000 home or $4,000 a month? You'd be scratching your head. You don't know. Like, what's the maintenance? What's the mortgage rate? There's so many factors here. But if you go online to Zillow or StreetEasy, you're seeing, and you go to sale versus rent, when you click sale, all you're seeing is the purchase price. So I think people need to understand what this could do to a prospective buyer's mortgage payment. So if I'm selling something, I want to factor that in. Maybe I give a credit that effectively gives them an interest rate that is at the market for the next 3 years. Because now, based on the due diligence that the agent did or the attorney did on this building, the building's going to be up to code in 24 months. So let's give you a credit of $10,000, which is I'm making up a number here, which is the equivalent of you having a market interest rate for the next 3 years. Along these same lines, it's going to take time for many banks to adapt to these new guidelines, where they need, or I should say buildings really, to adapt to what these new guidelines are. So this is a situation that creates so many opportunities. So a company like ours, we have so many
CrossCountry Mortgage.
CrossCountry Mortgage, exactly. Thank you, Ray.
Yeah, he claps louder for Scott than me. I don't remember that, Ray.
I love it.
That's true. Fair enough.
When you have lenders and investors in your portfolio that do not conform to standard Fannie Mae and Freddie Mac guidelines, they're more concerned about a client than they are about the building. In the end of the day, it's the client that's going to make the mortgage payment, not the building. They're willing to overlook some of these guidelines, or they don't need to follow some of these guidelines. So it's going to create opportunity. So there's going to be a vacuum in the market that's going to get filled by some of these options temporarily until these buildings are eventually up to code.
Right. As a buyer, you've got to talk to your lender early on, make sure that building is approved. And we see that, I think, more with co-ops than condos now, but with these new, rules.
Starting early is so important for anything.
Relying on professionals.
Correct.
That's why he gets paid what he gets paid.
A lot of the top agents right now are doing so much more work up front. And I commend all the agents who are doing this, where they'll come to me and they'll know so much about that building ahead of time, where in the past it was, hey, I got a buyer for this building, waiting for them to sign the contract. Now it's, hey, I got a buyer for this building. Here's some of the issues that they're dealing with. Can you tell me what your options are?
Right. No, it's just what we say all the time. Be informed. Make an informed decision. Reach out to Scott. Reach out to Shahriar Sedgh. And ask questions.
I also think when things get harder, it pushes people out of the industry.
Yeah.
So it's a great opportunity for so many agents.
It's too much.
It's a lot. You're doing a lot more work on co-ops and condos than you did in the past.
Yeah.
And some people are going to be fed up with that, and they just don't want to deal with it, and they're going to get out of the industry. So it creates opportunities for agents who are in it and understand how the industry works to pick up market share.
Well, that's great advice.
Another glass half full take.
I'm telling you, I'm going to get fired from the show. It's going to be the Scott and
pouring
Morgan
outside,
show.
But it's all roses in here.
All right. Well, I want to close by wishing my son a happy birthday.
Is it today?
No, it is Thursday, and I have a gig that night. He's like, "Oh, you're gonna celebrate my birthday at a gig?" I'm like, "No, we could do it like the next day. We do whatever you want." I said, "Or you just bring a couple friends to the gig, you'll have a nice dinner, and then you leave."
There you go.
But my son's turning 19. You're a great kid, Gregory. He doesn't like to be called Gregory anymore. It took him longer.
Call him what he doesn't want to be called. Then
I wanted.
Great.
I, at an earlier age, told people to stop calling me Gregory. I didn't wait till college.
Mm-hmm.
I just never. My mother gave most of us long first names.
He just wants Greg.
Yeah. because we have a short last name. Heym's
So
short.
is he a full name guy? His friends call him Greg Heym.
No, they just call him Greg.
They call him Greg.
Yeah.
Okay.
It's funny because, of course, you know, my wife insists on calling him Gregory, and his best friend, Bob, the mother gets mad if we call him Bob. No, he's Bobby. He's not Bob.
Mothers
Like,
get a pass, though.
I guess.
Come on. They have to.
But anyway, my son is a great kid. You know, he's doing well in college. He is incredibly healthy.
Wow.
You would like this. He won't eat fast food.
Mm.
He stays away from, he does drink Coke Zero, but outside of that, no soft drinks.
What's his guilty pleasure? What's he going to do for his birthday?
I don't know. You know, his favorite dinner is Chipotle. It's weird. Of course, with the double
Mikal Bridges
chicken.
also. That was his favorite, and he won a championship with
Hopefully my son won't make an embarrassing video like Mikal did while he was sipping whatever he was drinking that time. There were even Jalen Brunson had said, someone better get his phone. He can eat ridiculous amounts of food.
Yeah, 19.
I mean, we joked a couple of years ago, a little over a year ago, my niece got married. He ate 3 dinners at the wedding. You know, he's just that, sometimes he's that ravenous.
Yeah.
But he works out almost every day. He's really jacked up. He's really
Does he take supplements or
creatine.
anything like that? Yeah. It seems to be very popular.
He has an older cousin who's been on it for years and has studied it. So that's kind of like his guide on this journey, and they talk a lot. So, you know, a broker here told me that she was taking it, and not for exercise, but it sharpens your brain. That's one of the things about it.
Yep.
But you have to drink a lot of water, or you might have some issues. But no, he's good. He's got a good group of friends. He stays out of trouble. And sometimes he's a little smart with his answers.
He
but
should be.
He's an only
19.
child, so I cut him slack. But he has a very close relationship with his cousins. I think they all conspire against me and my brothers.
What's he doing for the summer?
He's been door dashing, but he had 2 cousins come in separate weeks, so he's able to hang out with them individually. And he's going to the beach. You know, he's working out a lot. And, you know,
I learned something about DoorDash recently. Do you know that every single employee, even the CEO, has to DoorDash, I think, 3 times a year?
That's not a lot, but yeah.
Something like that.
It's
but,
funny.
But it's every single person. Doesn't matter what department you're in, just to get a feel as far as
That's
how
a
it
good
works.
idea,
And you
you
can
know.
give feedback to the team as far as what's working, what's not working.
Yeah, and the problem is, like, he did it last night, and he barely made any money.
Mm-hmm.
Some nights you just don't get enough calls, or you get crappy ones. I didn't know that they do this, but he had to go to a Dick's Sporting Goods once to get batting gloves, and they didn't have what the guy wanted, so I had to call the guy, and that was a good one because he got a big tip for that.
Mm-hmm.
So it's good that you want to see a kid take initiative. I did that when I was 16. I got a job in a mall. Those jobs don't really exist. Malls are closing, and you see more adults working in
did
malls.
catering.
Then starts with a paper route, then maybe goes to fast food, or in my case, a record store. Sam Goody. But I like to see him showing initiative and wanting to work, and he's actually looking forward to going back to school because I think he misses a lot of the kids he saw there, the friends that he made.
Shocking. He misses going back to college.
To get away from us. No, it's look, we have a lot of fun together, and having an only child, you really get a personal relationship with him. You know, my dad had 4 sons, and I was the least trouble, so I didn't have, until he moved in when he started to develop dementia and Alzheimer's, and that's when I was able to really get close with him. And
Has there ever been talk about bringing him to a performance where you guys can play together?
He's done that. It started when he was just a trumpet player in high school. He would sit in, and we'd do a couple tunes. We actually featured him on a Sunday at Gusto Divino, one of the jazz things, and we did a bunch of numbers. Then it was guitar, but the problem is he wants to play Megadeth and, you know.
Yeah, but it's the Greg and Nikki experience, right?
The Nikki and Greg experience. Nikki, I'm surprised she hasn't busted through the door right now. And
she needs her name first.
We got to get Nikki on. But I tried to get Gregory on this summer. I said, why don't you come on? You know, you haven't been on in a couple of years.
Stop
you got
calling him Gregory, maybe.
You got rid of the mullet, you know. Well, see, I know that, like, if Joanne was ever going to start calling him Greg, I know she wouldn't be talking to me unless it's yelling. Then I know it's me. But he's a great kid, and have a happy birthday.
Happy birthday, Greg.
And look, you got your Knicks championship. That's your birthday present, right? So I don't have to give him anything.
Yeah, I agree with that.
We'll probably go to a couple Yankee games. Yankees got some good matchups coming up. Atlanta's coming in town, so that should be fun. Okay. But anyway, I guess that's the show for this week. Ray's clapping. He's clapping us off. We got to get a box where you get the playoff music, that they play at the Academy Awards. Yeah, just have the applause and then the that kind of thing. Or just like, time to go. Yeah. Thanks to Lone Daddy Scott Nadler. Thanks to Ray. We miss you, Lena. Enjoy your trip. And we will see you next week. Thanks again for all your support, all your listeners and viewers out there. And follow us, because we haven't said that in a while. And have a great week. That's the most important thing. Going to be a wet one here in New York. Mm-hmm. Hopefully you're having better weather wherever you are. Have a great week, everybody.
What do you really need to know about buying or selling a home? First, it's serious business. And it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.